everybody. My name is Jessica Pothering. I'm a reporter and journalist with Impact Alpha, and we have an interesting discussion lined up today, exploring the nascent but evolving technology sector at the intersection of climate and financial services, so climate fintech. And this is a fairly new field of financial services it's basically, the overall concept is that it's leveraging technology to analyze, underwrite, and disperse financial products with considerations for climate-related impact. I'm going to quickly introduce our participants. They'll provide more context on their organizations and how they're engaging at the intersection of climate change and financial technology in just a little bit. But just to preview everybody, we have Bethany Canton from BFA Global. I believe we have Patrick Sampao from Acre Africa joining us, but we also have Sendai Chagwandara from Echo VC, Dan Block from Mercy Corps Ventures, and Anita Farawal from Global Affairs Canada. So a quick introduction on my part. I'm with Impact Alpha. Like I said, we're an impact investing news organization. If you haven't heard of us, then I will drop some more information in the chat in just a moment. But so we cover this topic extensively and sort of all things impact investing. But for today, as an entry point into this topic, I think most of you all, are familiar with the concept of fintech and how tech-enabled financial services has been witnessing skyrocketing traction worldwide. Everything from mobile money to digital banks to remittance payments to business lending. And it's both substantially lowering the cost of global financial services and speeding financial inclusion for billions of unbanked and underbanked people worldwide. At the same time, globally, separately, we see the intensifying impacts of climate change. And while most discussions and money, frankly, is focusing on mitigating climate-related impacts, there's also a very real and very acute need to help vulnerable communities and livelihoods adapt to climate change. And so we're beginning to see these two worlds of financial technology and climate mitigation adaptation overlap kind of at a large scale. So through climate impact bonds, through sovereign debt restructuring, but at the individual and community level, which is what we're exploring here today, we haven't really seen much of that overlap and traction so far. And so the purpose of today's conversation is to understand why that hasn't happened yet, and if it should, and what the opportunities are for entrepreneurs and investors and other ecosystem players that can be capitalizing to think about how financial technology and climate should intersect more. So with that introduction, I would like to say we have the chat feature, of course, and as questions come up throughout the discussion, please feel free to introduce yourselves, drop questions into the chat. We'll get to those on the back end of the discussion, and that'll tee us up nicely for a Q&A at the end. But with that, I'd like to bring in Bethany Canton with BFA Global, who has been dedicating a lot of attention to these questions lately. And Bethany, just as a quick beginning, would you mind just starting off with like a quick introduction of BFA Global and what you all do?
Yeah, thanks, Jessica. I'm really excited to be here and for the conversation. So yeah, as Jessica said, my name is Bethany. I'm a consultant at BFA Global and a venture builder with one of our programs called the Catalyst Fund. BFA Global is a research, data, and product innovation firm focused on the intersection of finance, data, and technology to build more inclusive and equitable economies. The Catalyst Fund is a program within BFA Global, which is an inclusive fintech accelerator that provides bespoke venture building support and flexible grant capital to pre-seed and seed stage startups globally. So Catalyst Fund has been operating for about 5 years, and we've accelerated 43 inclusive fintechs across 10 markets. So we come to this discussion with deep expertise in inclusive fintech and with the deep understanding of the needs and lives of low-income and vulnerable populations globally and how to innovate to serve them better. We're in the process of launching a new program that's focused on climate resilience for low-income populations globally.
Okay, great. When we spoke ahead of this session, you mentioned that BFA has been doing a lot of thinking and research at the intersection of climate and fintech, right? So just maybe as a starting point, I sort of teed it up at the beginning of the call, but I think let's go a little bit more in depth on just framing up what climate fintech actually is.
Sure. Yeah, so I think we've been starting to think about this problem given our expertise in fintech and then this growing challenge around climate change. So we wanted to start by leading with the problem, which is that we know that climate change is going to impact the most vulnerable populations globally. So 100 million people are expected to be pushed into poverty by 2030 due to the effects of climate change. We know that climate change mortality is projected to be the highest in emerging markets. Gradual climate changes can lead to migration and to conflict. It can expand the geographic reach of pests and diseases like malaria. So we know that there's going to be really wide-reaching impacts on vulnerable populations. And all the while, we also know that these populations have contributed to climate change the least. So from our perspective, we realize that the populations that we are already working with are going to be the most vulnerable and the most exposed to the changing climate. So we believe that our work needs to begin to include a focus on building resilience to climate change in order to better serve these populations.
You sort of broke it down for me when you explained it into two categories. Can you dissect those a little bit? The sort of the tool aspect and then the climate aspect.
Sure. So yeah, we believe that there's a lot of solutions out there that can reduce the exposure of climate vulnerable populations and help them to build preparedness. But we think that they aren't scaling fast enough or far enough. And we think that fintech can really be a key component of sort of supercharging the reach and affordability of these solutions. So we kind of think that this can happen in two ways. So the first is what we would sort of call climate proofing existing fintech businesses. So we know that fintech is now one of the biggest asset classes in emerging markets, and we're seeing massive capital flows into fintech. And we know that fintech has also been used to reach millions of rural and low-income populations globally. And these are the same populations that are being exposed to the risks of climate change. So we believe there's a big opportunity to use existing fintech businesses to deploy resilient solutions at massive scale through leveraging existing assets and networks. So for example, you can take a last mile lending company like Branch or Tala, and we think that they have a great opportunity, that they have access to a lot of customers through SMS and phone calls. They have access to customer data. So we wonder if maybe they can offer SMS-based early warning systems to customers, or they can generate new revenue streams through offering new financial products like disaster insurance. We don't just think that this is an opportunity for these companies, but it's also an imperative for the long-term sustainability of their business models. So over time, as the climate changes, the solutions that they offer are going to become less appropriate and less fit for end users if they don't take the changing climate into account. Many of their customers are really highly exposed to climate risks, and so they need to adapt their products to better fit those needs. It also means that their customers potentially are going to have more income volatility and less ability to repay going forward. So they need to start taking these risks into account. The second place where we see fintech being able to make an impact on climate vulnerability is actually applying fintech solutions in new, innovative ways focused on reducing climate risk or improving the preparedness of vulnerable populations. So fintech can be used as a pure fintech product, as a vertical, so savings, credit, and insurance products specifically focused on the climate problem. So the good example here is parametric insurance, which one of the other panelists, Patrick from Acre Africa, is a great example of this. The other way that fintech can be used is as an embedded layer in order to increase affordability and distribution of existing products. So a good example with this one is solar irrigation. So irrigation's been around for a long time and can dramatically improve the resilience to changing rainfall patterns for smallholder farmers, but it wasn't scaling quickly enough. So fintech was embedded to make pay-as-you-go solar irrigation through companies like Sun Culture, and that's dramatically improved the affordability and access to those products. So yeah, Jessica, back to you. That's sort of how we're seeing the landscape.
Great, that's great. I do want to get, I mean, I think we're going to hope, I'm not sure if Patrick has made it onto the call yet. I'll flip it over to him in just a second if he's there. But I wanted to touch on a point that you brought up about, you know, I think many of us are familiar with some of the large fintech players enabling, you know, financial inclusion through digital loans. You know, you mentioned Branch and Tala. And I was just wondering, you know, in the work that you all have been doing so far, have you seen examples of, I mean, are these companies beginning to think about climate considerations and integration in their products already? Or what have you sort of discovered on that side of things before we get into the actual climate products?
Yeah, it's a good question. I think that it still is very early stages. So I think we're not yet seeing big fintech players start to incorporate climate risks into their models. Mm-hmm. I think that it's definitely coming. Like I think particularly fintechs that operate on the ground and with smallholders, they know that this is something that's going to have to be incorporated within the next 5 years. So yeah, I would say the short answer is like I don't really think we're seeing it yet, but I think it's on the horizon.
Does it you know, does it create a risk, you think, for these larger, I mean, does this create some of these sort of, we have legacy issues, right, in existing financial systems with trying to adapt to risk models that hadn't been embedded for a long time? And is that a risk for fintech firms, or just by nature of their sort of technology and infrastructure, they'll be more nimble and will be able to more readily adapt to that, you think?
Yeah, I mean, I think there's definitely a growing conversation with global financial markets needing to incorporate climate risk into their risk models. I do think fintechs are better positioned to adapt, and I think it's a bit more, it's closer to them in terms of the imperative because their customer base is so directly linked to the physical climate in a lot of ways for their like life and livelihoods. I also think that if they don't adapt, it actually compounds the vulnerability of their customer base. So their customers rely on these products and services. And if the companies that they're relying on aren't taking into account one of the major risk factors in their lives, then it can compound the vulnerability that they face.
Thanks, Bethany. I'm not sure if you all can hear me. I'm having an internet issue, so my connection's going. Okay.
Yeah,
all right.
We can hear you.
Okay, great, thanks. Thank you for that framing, Bethany. I want to turn to Patrick Sampao from Acre Africa. I'm not sure if he's online. If you're here, Patrick, could you speak up? No. Okay, it looks like Patrick didn't make it. Hopefully he'll be able to join us later because he's doing exactly what Bethany framed up in the second part of her conversation, which is designing insurance products for that are meant to mitigate climate risks for smallholder farmers. So Sendai, I'm gonna put you on the spot now instead then actually, and just ask you to quickly introduce Echo VC. I know you all are looking at developing and analyzing possible fintech solutions around other issues like urbanization and migration. But as a starting point, maybe just give us the quick overview on what Echo VC is doing broadly.
Yep. Thanks, Jessica. So my name is Sendai. I work for a VC firm called Echo VC. So we focus on seed and early stage venture, mostly in Africa, but also outside of Africa. And we like to focus on finding underrepresented entrepreneurs or businesses that focus on underrepresented segments and populations. Within our target sectors, we look at software, fintech, healthcare, logistics, e-commerce. But a new critical sector for us is, of course, climate. And so the way we're approaching the intersection of climate and fintech is we're trying to find fintechs focused on helping businesses or consumers address climate change in various ways, like risk assessments or hedging or carbon offsets, and other fintechs that enable communities to quickly rebound quickly from adverse climate events. And so we've made 3 investments in this space since 2017. So 2 are direct climate fintechs, and a third one is a fintech focused on climate adjacencies around housing and migration.
Great. I'm gonna get you to expand a little bit on what your portfolio companies actually look like, because I think in a space where we're talking about a new technology and an emerging technology trend, it's important to spotlight some of the kind of concrete examples. But maybe just as a starting point, how did Echo VC identify climate? How did you sort of spotlight the intersection of these 2 issues? What was the catalyst, I guess, for beginning to look at what the investment opportunities were here?
Yeah, it's a great question. I think it sort of stemmed from our interest in food and agriculture, and on food security. So we're doing a lot of work in Africa, trying to figure out how to play the food space. And then we realized a lot of it came from actually just climate risk impacting what we could do in the food space. And so we started looking more broadly, looking at companies that had scaled across multiple emerging markets that were coming up with very innovative solutions. And a lot of them were actually fintech or data companies with a fintech angle to them as well.
Is that why? Do you have any sort of speculation on why they were coming at the food and agriculture sector from a fintech lens?
So it's a great question. I think because food and agriculture is a big sector for Africa, because I think 90% of the population are smallholder farmers. And so by trying to figure out, okay, what are the constraints in agriculture, like how to uplift the smallholder farmer, a lot of it comes from fintech solutions like lending or from insurance. And so that's where the fintech exposure came in, is that, okay, we have to figure out the economics around that. And then looking more broadly, not only at the farmers, but different enterprises. So you have enterprises that have supply chain with climate exposure. So they're sourcing, goods from smallholder farmers, and that, creates risk around what they can provide into the market. So then we just sort of build up from there and found that it is a significant issue across the globe, of course.
I feel like your example is the way a lot of the investor community is going to be introduced to climate impacts in fintech, right? Like, you stumbled across it by looking at a completely different issue, and then it just sort of hit you all in the face, right? And so take a step back and explain how, now that you have discovered that, there's a trend here and a pattern and an opportunity, what is your view of the opportunity? And then, of course, the risk actually of not investing deliberately to mitigate climate impacts, in the financial, through financial services.
Yeah, I think maybe it's easier. I could talk about that from the lens of what we've done already and the companies we're looking at.
Sure.
So one of our first investments in 2017 is a company that began in Kenya, but it's now based in the US. They began as a data predictives company, so for climate and agriculture data.
Can you say their name?
It's Grow Intelligence.
Okay.
So they're building out a massive fintech vertical as well. They ingest trillions of data points and then use AI to structure that data and then create visualizations and also provide predictives around climate, agriculture at a very granular level. So they're now building out a fintech vertical which plays on 2 financial segments. One is around risk assessment and financial regulation, and the second is around climate financial products. And I can go more in depth into that if you like. The third thing they're doing, the third thing we're seeing is around adjacent fintechs. So these are fintechs that are playing mostly the migration. So we're seeing migration and climate are intertwined, as Bethany said at the start. And because of rising heat, the upcoming decades will be some of the hottest years for humanity. And we see that, for example, Nigeria, in the upcoming years, about 30 to 50% of the year will be extremely hot. Extremely hot being defined as more than 35 degrees Celsius or 95 degrees Fahrenheit. So that's like saying every day or every other day or every third day in Nigeria will be extremely hot. And so we're looking more broadly at the world, and we realize that the percentage of the world that is defined as barely livable zones, so zones that are too hot, will increase from 1% to about 19% by 2070. And then this drives, crop failure, food insecurity, and then migration from rural to city and city to city. And then this creates a massive constraint around the urban areas as well. So we came across another statistic that said in about 9 years, so by 2030, roughly 40% of the world's population that lives in urban areas will live in slums. And that's going to be about 2 billion people around the world, which is absolutely insane. And so we're looking at fintechs that help address that by either providing better services for immigrants or fintechs that help address urban constraints. And I have 2 examples around that I can talk about as well.
Yeah, I mean, so let's just dig in for a second on what financial services actually, the significance of having financial services for moving and changing populations, right? I mean, I think maybe just zoom out for a second and explain what the importance of people having access to these services as they're on the move and as their situations become increasingly tenable are.
So I guess one constraint is that people, as they migrate, it's very difficult, especially across borders. It's very difficult for them to take their money with them, and this is mostly bottom of the pyramid, the rural to city migration. So that's one constraint. I think the second constraint is as you immigrate to a new country, it's very difficult to onboard with traditional banks because maybe you lack documentation or you just lack a formal history in that country. So that's a very difficult pain point as well. And then the other pain points that we saw are around lack of access to credit, lack of understanding from the banks. Maybe there's language barriers, the trust barriers. Remittance is also expensive. And then having that access to borderless banking. So being able to take your funds that you have in this new country and being able to transact back in your home country or back in your home region. So those are the constraints that we saw around the pain points that need to be solved.
So I guess what I'm hearing you say is that this creates a level of continuity in an otherwise very unstable situation, right? Which that prevents people from having to start all over and start all over at the bottom of the pyramid in a new place, right? So great. Thank you, Sendai. Patrick, you're on. I see you. Hi. Sendai just mentioned a couple of examples of how EcoVC is investing in climate-related fintech. Acre Africa has been doing this for a while through financial products for smallholder farmers, right? And so I'm hoping maybe Patrick just give us a quick introduction to Acre Africa, and then we'll talk a little bit about the types of products that you're developing and the need that you're seeing.
Okay, great. Thank you, Jessica. So my name is Patrick Sampao, engaged at Acre Africa, agriculture, climate, and climate risk enterprise. Apologize for being late. I had problems with connectivity, but I'm here now. So simply, Acre is registered in Kenya as an insurance surveyor, and this means that we exist to design insurance products, mostly that provide resilience tools for smallholder farmers against weather-related perils, and the perils, of course, range from variations of droughts and to the other extreme, which is floods. So it could be excessive rainfall and insufficient rainfall. That's what we do. Now, we do this in 2 ways. Number one is B2B. So this is where we partner with stakeholders within the agriculture value chain that work with smallholder farmers. And I'll give an example of financial institutions that are looking to lend to farmers. And most of the time, they're not willing to do this because of the exposure, the levels of exposure when they lend to these farmers. Then the second lot will be, we call them aggregators here. And this is the big beer companies that contract farmers to do crops. Of course, they're investing into these farmers. And so as they get into this, they want to have safety nets to be sure that, in case the farmers lose, then they're also secure as far as their investments are concerned. Then we have B2C, and this is where we design and deploy or distribute microinsurance products directly to farmers. And one of the things that we stand out for is being able to customize or tailor make crop insurance products that are targeted to the last mile or the low segment customers or smallholder farmers. And we have a couple of tenets that we consider. So number one, for a very long time, and I think it's even in Africa, that crop insurance has been a preserve of middle and large scale farmers, mostly because no one came in to step in between the gap to design affordable products or affordable climate risk mitigation tools. So what we do is use existing financial ecosystem tools, for example, mobile money, fintechs that are lending to farmers, credit scoring, etc. So we leverage on those tools that exist in the various countries we operate to design covers that smallholder farmers can afford. And it goes as low as 50 cents, which covers the cost of a bag. So the average cost of a seed bag for maize, for example, is about $5. So it means if a farmer planted only one bag of seeds, then what is at risk for him is therefore that $5. So we design a cover that covers that $5 that of course would cost an average of about 50 cents of a dollar. And then the only reason that this is viable is because number one, we don't have to go to the field to distribute this product ourselves. We use, of course, we use mobile platforms such as the USSD. In Kenya, mobile money is huge, so farmers can pay premiums to us via mobile money, and we can also be able to disburse payouts to them via mobile money. So then the customer journey is short, and therefore the cost of delivering this product to these farmers is also low, and therefore we can afford to do it. I also want to mention that beyond just offering the basic product, we have also done a couple of improvements or iterations to it, to the point that we are now offering farmers an opportunity to purchase insurance in small, affordable bits. And I'll give an example. Let's assume a farmer is investing around $300 of inputs in his farm. In insurance, that will cost him about $30 of premium. Sorry. Not very many farmers, over 90% of them will not afford this $30 at one go. So what we do is we have built a platform that allows them to invest or save up for this insurance 3 or 2 months before the season begins. And then once the season is starting, this farmer has already accumulated quite a considerable amount. It might not even be $30, but they have accumulated a good amount that will give them good coverage against the weather-related exposure that they have. Yeah.
I just have one question, and this is going to sort of tease an issue that I want to get into a little bit later. But do you have a sense of how many of the farmers that you all are supporting are women?
Usually over 60% of the farmers that would uptake our products are women by default. So actually what we're thinking is, I mean, if we would deliberately, made deliberate efforts to target women, it means that will shoot up all the way to around 70%. Oh. And we've discovered that the reason of this is that while everybody assumes that women are not savvy enough to operate gadgets and do all of these things, they actually are.
I don't think everybody assumes that.
We've had that anyway. Yeah. So women are actually the ones that operate these gadgets more than the men in the families, and therefore that has been, I think, one of the reasons as to why we have more women consuming our products. We have more women wanting to know. In fact, for us to be able to offer the savings bit of it, it was triggered by women who said, "Okay, I would want to cover myself a bit more, but I cannot afford the $30 at one go. Could you build something that allows me to put in $2, $1 every now and then towards the season, and be able to get an optimum amount of coverage?" Yeah.
you all are you have an interesting place in this ecosystem, right? Because you are operating between a large number of existing stakeholders, right? You said, you have existing mobile money providers, large banks that are interested in providing cover for smallholder farmers, which many of them, as you know, have been reticent to do because of the high costs of underwriting insurance for smallholder farmers, and then you're also there sort of championing this last mile distribution effort too, which is generally pegged as one of the reasons that financial inclusion has not been more pervasive, is because of the costs of getting these products out into rural areas in particular, right? And so how do you frame the opportunity to all of these different stakeholders or the need to build these climate considerations into their financial products and extension of their services?
So one of the key reasons, if I'm to start with the financial institutions, one of the key reasons as to why they do not lend to farmers is because farmers are perceived to be risky, or rather their enterprise is perceived to be risky. And the reason for this is that these risks are, according to the banks, or from a standpoint of the banks, they have no visibility on the enterprise. They do not know, for example, if a farmer is doing potatoes, the financial institution has no visibility on what lies ahead. They have no visibility on what the farmer is doing on the ground. And this is where players like the company that Tendai mentioned, they have all this data. So we partner with such to be able to get a lot of data points that then provide visibility to these financial institutions to make, can I call it, lending decisions. Mm-hmm. So then just from sitting at their desk, they will enter, the farmer will basically give the bank their location. This is where I am. This is the crop that I want to do, and I want to do it at this particular time of the season, or there's 2 seasons in Kenya or even Africa. There's the long rains and the short rains. So then once they enter that information, the platforms we have are able to credit score that farmer and provide the bank with information to say, you can lend to that farmer, but the exposure is at this level, and therefore you might want to have insurance at this rate. So those are kind of the things that we do. Now, I also want to mention that, speaking of last mile, that has only been possible because we mimic existing ecosystems. So for example, if you look at a lot of East African countries, is Kenya, Uganda, Tanzania, and a bit of Rwanda, the mobile phone penetration is high. Mobile money penetration is also high. And then most of these people have carried out a function or two on their mobile phones. And then the most basic one is uploading airtime, purchasing a scratch card and loading airtime onto their phones. So what we have done is mimic our customer journey, exactly how people load airtime is how you purchase insurance for us. So we've packaged our product into a card, or into a scratch card that farmers can, get from the aggrovate or from through their groups or agents. Scratch the card, enter the code. It will prompt them to enter their PIN. Basically, carry out functions that they have carried out before many times. And this breaks the barrier of breaking into the last mile. So it's basically just we've tried to put in all these data sets together in the background. So as the farmer, for example, is dialing our USSD, we have partnered with a company, with an MNO like Safaricom, who provide us a tailored USSD that collects GPS at the back end. Then on the other hand, when the farmer enters their number, the government of Kenya, for instance, provides us with more data on that farmer as far as their lending, credit scoring, all of these things. So then by a farmer doing just one action at the back end, they see the engine is running quite a number of, or analyzing a number of data sets. So by the time the farmer is finishing, we have so much about them that we'd be able to offer them a tailored product, or do a lot more, offer them a lot more products, including going into climate resilient seeds. So that's another area that we are getting into, because we realize that insurance is a hard sell, but seeds is not. Seeds is a basic requirement for farmers. So then what we're doing Number one is considering bundling as part of it. Bundling, basically, when you buy seeds, you buy it with, it comes with insurance. It comes bundled with insurance. So what we're doing in that aspect is that we are now negotiating with seed manufacturers. Number one is to match farmers with seeds that match the climatic conditions of the areas where they are. And therefore then the uptake for our products shoots up, basically because we're bundling with a commodity or a product that is very basic to these farmers and is very key. And then we have a good response rate so far, and we already have a partner on board who's willing to cut off some of his margin, which now becomes insurance, and to him, it's a better offering to their customer, because when you tell your customer that for the same price you always buy this seed, I'm adding insurance on top of it, then that seed becomes more marketable. The value offering is better for the farmer, and the farmer has more appetite to therefore purchase this seed. Yeah,
I think of everything that you've just spoken about, I think what I like that you've done here is I mean, one, I think you've outlined very clearly what the impacts on the farmers that you're serving are. So I think that is very clear, right? The need for more of these climate mitigation products, but you've also highlighted the way that technology is and allowing you to efficiently distribute these products and encourage adoption and traction, right? Through beneficiaries that otherwise, are unfamiliar with them or may not be inclined to use these products. But how do you sort of encourage other sort of larger legacy mainstream financial institutions to, like, what is the benefit or the opportunity for them to because they're ultimately going to be the ones that sort of take this home, right, and drive it to scale. So how do you explain to them how these models are working, but encourage them over why they should do this?
Yeah, usually it's all about the business case, and especially for the financial institutions, it's always about the business case. And one of the things that insurance does to the farmer is that it gives them the confidence to invest more. So where a farmer would only want to invest just a little bit, a farmer who, for example, would have only wanted to invest about maybe $30 in their farm, with a better understanding of insurance, this farmer all of a sudden is very confident to invest $10, $15, $20, $30, $50. So what's happening is that when we're talking to these institutions, we're telling them, here's a product we have designed for you. Here's a farmer who normally spends maybe $100, but with our product and proper education, this farmer is willing to spend $50. Okay, so then therefore it means a larger loan portfolio for a financial institution, and for a manufacturer such as the beer company that I mentioned, is that they get higher production. Why? Because the farmer invested more, they got better, high quality inputs. They were willing to cultivate a larger portion of land, and therefore the deficits they experience in terms of production, like if you come to Kenya, the beer companies will tell you they're experiencing a deficit. And even the flour companies, they're always experiencing a deficit they have to import. The reason this happens is because farmers are not confident enough to invest a lot of their money into these farms. So they do it just a little bit. So we're coming in to say, hey, we have a reason we have a reason why farmers will invest more and will be more confident to put in their money into these enterprises. So therefore, as I said, for the bank, it's a larger loan portfolio. And for the manufacturers or aggregators, it is a higher production, and means basically them, slowly catching up on the deficits they have on production. And then that seems to be like a language that they understand. And one of the things that we're observing is that they're now willing to lend and pay for the insurance themselves. So they're saying, hey, I'm willing to lend to these farmers, and I'm willing to pay for the insurance upfront, and they could pay me at a point when I'm collecting, when I'm it could be it's a checkoff system, basically. That's what I'm trying to say. But that's what's encouraging them.
Great.
Yeah.
Thank you, Patrick. That was illuminating. Dan, I'm gonna turn this to you for a second. I mean, I think Patrick has made a very good case for how how technology, for existing infrastructure technology, and organizations like his are really helping to catalyze some early traction and get the multi-stakeholders in financial services to begin thinking about climate risks and impacts. I mean, you're with Mercy Corps Ventures. You're an early stage impact investing company, and you all have invested quite a bit in new fintechs, and I believe as you mentioned, are beginning to think about where climate comes into play in your portfolio and the other opportunities you're seeing and what other investors are doing. So maybe just give us an overview of how this issue came across your own radar and how you're thinking about it.
Yeah, absolutely. Thanks, Jessica. And yeah, great discussion so far. Just very briefly about Mercy Corps Ventures. So we're, as Jessica mentioned, we're an early stage impact investment fund focused on emerging markets, the impact investment arm of Mercy Corps, the global NGO. And we invest, and we've been invested in over 20 companies over the last 5 years, from the pre-seed up to Series A stage. So still early stage businesses across 4 segments, several of which we've kind of come to see in retrospect have interesting alignments or relevance when it comes to climate adaptation. The 4 segments being the future of work, last mile logistics and distribution, smallholder agriculture, and then fourthly, frontier fintech and financial inclusion. And in that last bucket, that's been something that's been an increasing priority for us over the last 12 to 18 months. Last year, we launched an initiative called FinX with a large crypto foundation out in the Valley to look at new blockchain, crypto, and other frontier financial technology solutions that can really be leveraged to accelerate financial inclusion and to be able to make investments into businesses like that, as well as to pilot and test out these applications. And actually with Patrick and Acre, that's an example of a case where we're looking at sort of the application of some of these financial technologies for facilitating climate adaptation for vulnerable populations. And yeah, maybe we can talk a bit more about sort of some of the things we're testing there around smart contracts and payment mechanisms for digitizing insurance products that are applicable. That's kind of one area that's been a major focus for us. And the other area that we've increasingly seen as we've looked sort of across our portfolio in the ag space, the effects that climate change is having on not just the smallholder farmers that are the end beneficiaries of the companies that we invest in, but for the intermediaries, for those companies themselves, for the off-takers, and the challenges that climate change poses in terms of what's already a very difficult business sector in terms of having literally 100% of your income tied to one period of the year, the harvest period, and then compounding that with all of the different factors that I think is probably quite apparent to those of us in this discussion that climate change adds to that. In logistics, again, the importance of being able to have sound logistics, transparent logistics, to be able to trace products, track products, but also to be able to ensure that products are able to get from rural areas to urban areas in efficient ways, or from urban areas to rural areas quickly, and to not have, especially when it comes to agriculture, not have perishable products that fall away. And as a result, we've come to really see there's a huge opportunity here and a huge need to be taking a much more forward-looking approach to climate change across our portfolio and to climate adaptation. And from an impact perspective, I think it was quite clear to us that the effects of climate change sort of across society are going to be quite pervasive. The way those effects are going to be distributed and who's going to be most impacted is largely going to be on sort of the low-income segments, on the most vulnerable. And so not taking a climate adaptation approach as an impact first fund focused on the sectors that we are is just sort of a mistake and a missed opportunity. But I think where we've kind of come to evolve as we've been taking more and more focused lens is that climate adaptation as an investment thesis is not just one thesis that fits alongside several others, but really something that if you look at sort of where is the world heading to, and taking a long-term view of investing and long-term view of sort of the future state of the way the global societies and global economy are going to be shaped. Climate change is really at the forefront of all of these transformations. And so when we look at sort of the investors that we look up to, those on the call here, also, the stuff that like Union Square Ventures has done, and Fred Wilson thinking very progressively about climate change and what are the opportunities and the needs, it's become increasingly clear to us that we can't be looking at climate change as one silo, which we invest in alongside others, but that it really has to be something that we look at as a cross-cutting mechanism. And so, to be honest, we're still on the journey. We're still on the learning process of what that means. We started with asking ourselves sort of those questions. So every time we make an investment now, we're looking at what is the climate adaptation angle to this investment. And I can share some examples of sort of how we've done that with different investments. And we're also sort of now realizing, well, this is important not for us to just be asking ourselves, but to be asking our co-investors, to be asking entrepreneurs that are in our portfolio or new companies that we're working with, to understand sort of how are they seeing this? Are they looking at some of the climate blind spots, but also the climate opportunities? And so yeah, that's sort of in a nutshell sort of how we've come to be more focused on climate adaptation and trying to get a better understanding of how to integrate that across our portfolio, which, yeah, happy to share some sort of examples more specifically as well.
Yeah, great. I mean, I do want to get to an example or two actually in a second, but I mean, it strikes me that the way you've sort of discovered this cross-cutting nature of climate change as an issue that needs to be more deliberately considered across your investment activities in your existing portfolio. It sounds very much like what Sendai was saying about how Echo VC discovered the climate issue, right? And my I don't know, concern, I guess, is that so many other impact investors are going to be having this sort of similar discovery, right? And how do you, what would you mentioned investors that you've looked up to as you've been digging into this and finding examples of like real leadership in this space. I mean, can you cite any examples of folks that you think are very sort of progressive in the way they're thinking about this, and who you would want other investors like Mercy Corps Venture that are just now kind of coming into this issue and discovering it themselves that you would want them to be paying attention to?
Yeah, I mean, so obviously, the universe of impact investing and fintech is quite broad globally. Right. That being said, climate change and the effects it's having on societies is a global challenge. I think there has been, if you look sort of through Union Square Ventures, Fred Wilson's blog, some of the LPs that are, or the GPs rather, that are alongside Fred, they've done a lot of thinking about sort of the effects that climate change is going to have on society, how it's going to transform societies. And naturally, they're US based. They have somewhat more of a US based lens around their VC portfolio. But I think the fact that one of the luminaries in the US VC space is taking this on not as a ESG strategy or as a or as sort of a small sort of sliver of some of their angel activities, but actually bringing this into the forefront and saying, there are major market gaps here. There are major market trends that are coming, if we're not investing in this, then we're missing out on opportunities. And if we're not looking at this, then we're exposing ourselves to significant risks that that we're not seeing. Yeah, I would say, I mean, honestly, I think there's a lot that's been done around climate change and the importance of climate finance and impact investing and climate mitigation. And I think those are all great sort of tools to begin to think about sort of what are the right questions to be asking, what are the right the right things to be thinking about when it comes to climate adaptation. But the spectrum of sort of defining climate adaptation as a broader lens across the portfolio is something that I think a lot of folks are just kind of coming around to. I mean, I respect a lot the way Echo VC and and BFA and Catalyst are starting to think about this. Something that we're on a journey towards thinking about. I know Acumen has a climate adaptation fund in East Africa that is looking at sort of a certain segment of climate adaptation. And yeah, I think there's sort of an opportunity for us to learn and sort of discover together. But I will say, I think we're early on this journey, but from an impact perspective, this is something that a lot of impact funds, I think, as you mentioned, are going to start to be thinking about much more pervasively and looking at sort of what are the needs when it comes to climate adaptation and sort of the risks. But the way I see this is if an impact investor looks a lot about the needs, a lot of fintech and VC investors are looking at opportunity. And I think this is a case where we do ourselves the best service as an impact investment community and as a sort of a global emerging market investor community to be asking these questions from the standpoint of, where are there opportunities here, and which are the fintechs that are going to be best positioned to thrive coming out of this. And frankly, that's not something that I'm hearing or seeing too much yet in my sort of poking around in the market.
Just quickly, I mean, maybe you can just cite one of those examples, that makes it a little bit more concrete for everybody about, how you are applying a climate lens to your existing portfolio.
Yeah, so maybe I'll give sort of just a little bit of kind of a context for sort of how we've been looking at climate is, I think, in sort of similar to how others have explained it, sort of in two layers. One, looking at really businesses that are climate first in terms of how they can really be accelerating climate adaptation through their work. So we've invested in a few players in the microinsurance space, in sort of traceability space that really seek sort of climate as being at the core of what they're doing. But then sort of the second lens is less around sort of businesses that identify themselves as sort of climate entrepreneurs or climate adaptation entrepreneurs, and more around sort of climate lens investors or climate lens and investing in them with the climate lens. And so, yeah, one example I just wanted to give, we recently closed an investment in a company called Imalipay in East Africa. They're an early stage business that is providing financial services to gig economy workers, starting with the e-mobility sector, working with the likes of the Ubers and Lyfts and Bolts and Safeboaters and local players in across Africa. And they're kind of I think an interesting case because the entrepreneurs don't identify themselves as climate entrepreneurs or specifically focused on climate. I think their near-term opportunity isn't maybe directly linked to helping those that are most affected by climate change today. And as we were looking at the investment, it wasn't something that readily rose to the surface as, the investment opportunity is financial inclusion specifically tied to climate change. That being said, one of the things that really ended up exciting us about the potential for where this investment could go is looking at some of these broader trends that have already been discussed: the increasing move towards urbanization, the increasing leveraging of financial services and digital financial services as a means for folks to be able to get access and to mitigate sort of the challenges that comes through from being uprooted, as well as sort of from a last lens, looking at that there are going to be a lot of changes that are sort of imposed from the environment that affect populations, but we're also increasingly starting to see cases where governments, regulations are imposing changes around how people can live and work. And I think one of the things that's interesting to us about where a company like AmaliPay can go is as governments and regulators start to put in place regulations around, for instance, minimum emission standards or requirements to have transitions to electric vehicles, or to upgrade certain vehicles to be more able to withstand severe flooding on the streets. Is it going to be the low-income workers that don't have access to financial services because they don't have that financial history that are going to be most affected? Or are there going to be solutions, and could AmaliPay be an example of a company that provides, through their suite of services, solutions that allow those populations to be able to respond and to continue to be active, thriving members of an economy that is itself responding to climate change?
That's an interesting example that you talk about. You mentioned at the end sort of how this affects the underserved communities. I feel like the sort of big elephant in the room, or at least from my standpoint here, is that we know that climate change disproportionately affects women in emerging economies in particular. And we even heard, we heard Patrick say just a second ago, that in the smallholder farming segment, roughly 60% of their customers are women. But if they were more deliberate about targeting these products for women, that number would increase considerably. And at Impact Alpha, we just last week actually hosted a call with our subscribers about investing at the intersection of climate change and gender. And one of the things that a report that came out from GenderSmart a couple of weeks ago, looking at this very issue, showed that particularly if you're an impact investor and you're concerned about investing for sustainable economic development, if you take if you look at climate as a cross-cutting part of your investment activities and gender as a cross-cutting part of your investment activities, you touch basically every sustainable development goal, right? And so it's not just how climate is cross-cutting in this issue, but it's also how if you think more deliberately along just the climate lines and the gender lines, your overall impact just increases. And it seems like financial services being a baseline for driving economic inclusion for a lot of people. I mean, this is kind of it almost seems like the natural vehicle through which to amplify both of those types of activities. So with that, Anita, I know you're with Global Affairs Canada, and I'd like for you just to introduce GAC's activities and thinking around this space, but I know you all are very active in the way you think about financial services and climate and gender. So perhaps if just as a starting point, you could introduce GAC's work a little bit in that respect and how you all are thinking about this issue.
The magic of the mute button. Thank you very much for having me, folks. I'm happy to speak a little bit about what Global Affairs Canada has been doing and how we think. But I have to tell you, I'm fascinated by some of the things the panelists have been saying. When Dan speaks about the investment thesis, that's exactly what I think about, right? So what is, you spoke about, Dan, what's the investment thesis for climate adaptation? I'm always thinking, what's the investment thesis for climate adaptation and gender equality together? Climate mitigation and gender equality together? Products and services that target women, specifically around climate. Women getting access to the workforce, getting access to employment opportunities that are going to result from climate mitigation and adaptation projects. Those are the types of things that cross my mind. And I'm happy. I'll go on and speak a little bit about what GAC does, but I would love to hear, Jessica, you took the words right out of my mouth. I'm very interested in hearing how folks make a compelling case to investors that investing in women is and girls and climate adaptation, investing in vulnerable communities. How do we make the compelling case to that this is the best path, right? So I'll talk to you a little bit about what Global Affairs Canada does. So I want to be clear up front. Fintech is not the space that I normally think about, but when Patrick talks about climate risk insurance, that is a space that I think about a little bit. So I can tell you what Canada's committed to in the past on climate finance. So in 2015, we pledged 2.65 billion for international climate finance over 5 years. And the objective of that funding, we focus on really three things. One is GHG emission reductions and like abatement, and supporting adaptation actions. So advancing adaptation efforts for folks. And then the third thing that we do is mobilize new private sector capital. So we've done that. The way we think about it is we've supported sort of a gamut of projects on clean tech, renewable energy, climate smart ag, climate resilient activities, fisheries, agroforestry, and also governance. And I can tell you a little bit more about that. But Jessica, you hit the nail on the head when you said, really, we have something called the Feminist International Assistance Policy, and that came in after we announced our pledge for international climate finance. But you'll see it in everything we do, not just on the climate finance side, but really everything we do is governed by this Feminist International Assistance Policy. And I will say that, it's clear. I mean, when you folks speak, I don't need to say it. Women traditionally work in climate sensitive sectors, right? Related to agriculture, health, ecosystem, forest-based management. And for me, that means that there's an opportunity to scale up not only women's participation, but also women's leadership in climate action. And that may be by drawing on women's-led organizations that already work in the area, supporting them. That may be by investing in SMEs that target women, like I said, women's products and services. It may be investing in SMEs that are where women are leading the organizations. There are so many opportunities out there. In the past, one of the things I would say is that overall, I'll just mention that our funding parameters drive the kind of work we do. Okay, our financial parameters. And so we've been funded, in the past, we were funded a great deal by URCs, which are loans, right? And that generally points you in one direction. When you're doing climate, where you go when you have loans, where you need to have a stream coming back, is you go in the direction of mitigation projects, you go in the direction of clean energy projects, you wind up doing a lot of work with often multilateral organizations. But that isn't the only thing we've done. We've had some enormous success with grants as well. And one of the things we're doing right now is we're thinking through our strategy for the next 5 years. And we ran stakeholder consultations last summer. We ran them internationally. And we heard so many different things, but I'm thinking about 3 lessons that we received that I think came out loud and clear. The results of our stakeholder consultations are available on our website, and I'm happy to point anyone who's interested in that direction. But I think what we heard is that we need to implement gender responsive climate finance across all sectors. We heard that at every session. And we heard that, we need to make what that means to folks is not just, the usual sex disaggregated data. It means making sure that women's needs, knowledges, expertise, networks are leveraged. And I think about the networks as a kind of an interesting one for climate action to be successful, and that women need to play a role in both mitigation and adaptation. The second thing we heard is that we should support the private sector of developing countries so that they can build their sustainable climate solutions in their own economies and increase impact. And I think the third thing that we heard was that we should build community resilience and enable locally led solutions by improving access to financing in the local levels, supporting capacity building and investing in many different things. One of the things that was mentioned was community disaster risk reduction, which comes to mind right now. So I can't, our strategy is under development right now. I can't tell you much about it going forward, but what I can tell you is there were many things that we heard loud and clear. And I think some of those messages might be relevant here.
So for what GAC is doing, I mean, the thing is this is fairly new thinking, I would say, across the impact investing and development finance ecosystem. We've been talking about gender lens investing for a while, and I think it's fairly well understood, when you're operating in microfinance or supporting smallholder agriculture, that there's a disproportionate impact on women. We're also aware of the climate risks for smallholder agriculture generally, but rarely do we hear this conversation brought together, right? And that's just starting to come up now, and I think as Dan and Sendai have made clear, as the investor community and other financial services firms, intermediaries, ecosystem players are kind of discovering the need for this more holistic climate lens across their investment activity. If this is so early in the discussion, gender should also be integrated into that, right? I mean, you don't want to get too far down the road, right? And then everybody realizes later, we haven't designed our thinking with a gender lens in mind. And so I think, Anita, the question that I would ask for you is, how do you explain the case for why it's so important for us early in this thinking process to be thinking with a gender lens?
Well, that's an interesting question. There are so many reasons, but I feel like it's not for me to make the case. Almost, it's the situation is, for me, it's so obvious. The problem I have when it comes to gender mainstreaming, yes, I know, Jessica, I'm really sorry to say that. It's so obvious. That's not what I meant. What I meant was it's everywhere in front of you. But one of the challenges that I have is when we talk about is how to gender mainstream, so that there is no conversation about investment theses, about adaptation, about products, about services that doesn't say, and specifically, we need to focus on this area and address these unique challenges that relate to women, so that we can increase access to the marketplace, increase access to assets, increase access to resources for these groups, because it will, right, advance economies, build community. And for me, the number one thing, I think about it for women, I think about it for Indigenous peoples, I think about it for many communities. It is advancing, the name of the game is advancing community resilience.
Yeah.
Right? So if we can draw those lines, that's the path for me. And what that takes, I mean, I would say that that takes a combination of things. It takes, and I can talk to you a little bit more about that maybe a little later, but it takes, in some cases, when you want to make the compelling case, you have to do it through demonstration projects, right? You have to do it through challenge funds, so that you can look back and say, see, that's how it was done. And we've been working somewhat on that. We announced a couple of demonstration projects and challenge funds that are specifically targeted at what are the unique challenges that women face in the market in delivering climate adaptation and mitigation projects. What are the unique challenges that women-owned SMEs face, and how can we demonstrate through funding that these are compelling projects and beneficial projects to start it off, right? So I think challenge funds are play a big role in there. The other way to make the case, and I can talk to you a little bit more about that maybe a little bit later, but it's got to be through networks. This is not, I don't think that you can just talk about the fintech sector in isolation. And I work specifically on climate risk insurance. And the only way that you can have, that you can mobilize is by bringing, it's an all hands on deck approach, right? So you've got to bring not just international financial institutions, you've got to bring country partners to the table. You've got to bring civil society on the table. You've got to bring academics to the table. Often we have conversations with academics on the side, right? Instead of having them be at the table. We need those think tanks to be there with us. We need the private sector to be there with us, right? We've all got to have that conversation. And I think about, in terms of how that was done, I think about, I'm going to put up the Insure Resilience Global Partnership as a good example of that, because it's something that I'm involved in. So Canada sits on the high-level consultative group of the Insure Resilience Global Partnership, and that organization is a network. It is really, I think it's a network that advances climate and disaster risk financing solutions, specifically by using this all hands on deck approach. They bring the multis to the table. They bring civil society to the table. They bring everyone there in the conversation. And my role is that I co-chair the gender working group alongside Care Canada, not Care Canada, sorry, Care International. And the conversation, I would really say, you know, the climate disaster risk financing and insurance conversation, I don't know. But I'm going to say that that 20 years ago, that wasn't even really a conversation.
Yeah.
Okay. And now there is a global platform. And not only, so the first step is to build a global platform, but the second step is the step that I'm really excited about, and I find it very provocative. It's the gender working group, where we bring all of those parties to the table and they talk about gender, and they talk about how to transform this sector, climate risk insurance, to make sure that gender is not the second conversation or the third conversation. It's part of that very first. You can tell that I get a little excited because I'm pointing and I don't want to point at you, Jessica. But it's part of that conversation at the very beginning, right? We start the conversation that way. And the way that happens is for all parties to sign on to a gender declaration. And that gender declaration is on the front page of the website. This is how we do it, right? So I mean, I could keep going, but that's kind of the way I think.
I mean, I think you're sort of highlighting, you know, by talking about the, you know, how this begins is, you know, through networks. I mean, I think what's been clear to me in this conversation is, you know, from everybody's input, there is a lot of thinking happening here, but it is very early stage, right? And like what really needs to happen is there just needs to be much more discussion and resource and knowledge sharing and putting these questions out there. I mean, Dan, you know, you sort of teed it up by saying that, you know, you're early on in the way you all are thinking about this, and you have questions for all of your other investor peers and how they're thinking about it too. And I think that's, you know, to me, I think that's what has really come out of this is just the importance of making sure that all of these different factors become a core pillar in this conversation early on rather than later, right? I you know, I want to get into, there's only a couple of questions in the Q&A in the chat group. I'm not sure if folks in the audience have some questions they would like to pipe up and ask. I would like to just sort of end quickly by asking, Dan, I'm going to start with you, and then Anita, I'm going to go to you. What would your call to action for the investor community be?
Yeah, I mean, I think that, you know, this is like as has already been said, you know, in multiple different ways and flavors. Climate change is something that we're already seeing the early effects of. It's going to change society in transformative ways across all aspects of society, and that creates both incredible risks to existing businesses and existing models for investing that aren't aren't looking at those changes, but also huge opportunities for those businesses and those investors that are looking at how to capitalize on the transformations that we're going to see in society. And certainly from an impact investing perspective, those that can see the opportunities and also deploy capital in a way that is equitable and that supports those that are rising to those opportunities, and supports the more vulnerable segments, gives us a tremendous ability to get sort of what we're all really looking for in impact investing, which is, since Jessica's leading the panel, I'll say sort of the impact alpha. But this is something that not a whole lot of people are looking at, or looking at in a great amount of depth right now. And by doing so, there's a huge opportunity, I would say, for impact investors to really be able to prove out the impact, but also to be able to take advantage of a good amount of alpha in this space. And I think that's true not just for investors, but for the savvy, strong entrepreneurs, the fintechs that have been raising the 100 million plus rounds. You have the ability to position and to pivot in a way that allows you to take advantage of huge sort of market forces and dynamics that are going to be happening over the next decade. And those that do that effectively are really going to have a huge leg up. I was just going to add, but end by saying, in doing some quick exploration for this, I was speaking with some of the larger fintechs in West Africa, some of the leading sort of like fintech investors, and there are a lot of folks that were saying, really interesting questions. We're just not thinking about this. In one case, someone said, actually a couple cases, they said, these are interesting things to explore, but we have so many other priorities right now. This is a luxury, is the word I kept hearing over and over. Like, this is a luxury we can't afford to spend time on with all of these other priorities, which is understandable because early stage businesses or even late stage businesses, there are a lot of fires to put out, and you're focused on the day to day. But I guess I just sort of end by saying, from my perspective, this is one where it's not, looking at climate adaptation and bringing in a gender lens component to that is not a luxury that we don't have time for, but really we don't have the luxury not to be doing that if we want to be building viable, sustainable business models. And so that's sort of the way we're looking kind of as we're going forward, and very open to hearing other people's insights and sharing on our journey as we move forward.
Bethany, I know you mentioned that, you all have some from some other like specific examples of how you're adding the gender layer into your thinking. And I was just wondering if you could highlight sort of I don't know, I guess how you're looking at that, and then just touch on how your own work at BFA Global has sort of evolved from fintech to climate to gender, and is now like incorporating all three of these things.
Yeah, thanks. I'll just start by saying, like, I love Anita's framing on this. And I think the way that we think about the case for incorporating gender and how we think about incorporating that within our climate program and the companies that we work with is that, like, yes, women will be the most impacted by climate change. And I think the framing that we want to move away from is that women are vulnerable, and they're vulnerable to these changes, but more as like changing the conversation to women as actors and decision makers in their communities and in their families. So we see this with a lot of the fintech companies that we work with already, that women are responsible for a family's assets and for their financial decisions, and they're often primary decision makers within the home. They're probably already the ones that are experiencing climate change more so than their male counterparts. And they're going to be the ones that are on the forefront of making decisions about whether to invest in climate resilient solutions for their household and for their communities. We see women as a specific type of end user for our fintech companies and for climate companies, and to encourage them to think about, like, when you are designing a product and you want to stay user-centric and customer-centric, this is a specific type of user that you need to be designing for. And so I also liked Patrick's framing earlier, and the way he talked about, like, you can specifically think about these products as a product for women and that suits their needs. and that can better serve them in terms of like their needs within the family and their climate risks.
Great, thank you. Yeah, just for the last couple of minutes, Patrick, I want to ask the question to you as well about kind of call to action. What would you like to see others in the, I mean, you sit at the intersection of so many different stakeholders in this ecosystem. I'm just really eager to hear what type of action you would like to see from people, and what how to get more attention and resources and interest, you know, in scaling up the types of solutions that you all are developing.
First off, what Anita said is music to my ears, and it's because this is something we have experienced on the ground while selling the product, that we acknowledge that the biggest actors, as Bethany also said, the biggest actors in every place we go to, whether it's on lending, whether it's on the insurance itself, are women. And therefore we have been forced, I'm using that word safely, we have been forced to adapt, women, factoring a gender lens in product design, factoring a gender lens in how we distribute our product, factoring the same lens in how, how we interact, how we build platforms that enable women to interact with us more. Why? Because commercially, they are our biggest customers, and that is where the potential lies, especially for who are looking to make these a viable business. I think that should be all from me. Everything else I think has been mentioned.
Okay, great. Sunday, do you have any sort of final thoughts for yourself?
Thank you, Jessica. I think, just trying to encourage other investors to look for new innovations, not just for Africa, but also how Africa can interlink with global markets. So entrepreneurs building for Africa, with a global focus in mind that can scale across emerging markets, and also value Africa can bring to the fight against climate change. So around carbon offsets and carbon sinks.
Anita, I'm going to give you the last word. Call to action, final thoughts.
You know what? You have all said so much, and I've taken copious notes. There's so many things I want to think about, but I think, if I was to keep it simple and short, I would say, when you design your projects, when you do build your investment thesis, lead with inclusion, and lead with it not because it's the right thing to do, lead with it because it's the best thing to do.
Yeah. I think that well put, Anita. We have just a couple minutes to go. I know that this call is being recorded, so I'm sure that anybody on here, if you didn't get a chance to take notes, that there will be a call recording, but also feel free to reach out. I just dropped my contact information in the chat and Impact Alpha's web address. If there's any way that we can be a resource to you all to help connect you with other folks on this call or outside, and also just to galvanize some resources for you all as other people begin thinking about this. I hope this is just the early part of a much more extensive and lengthy and thoughtful conversation to come. So thank you all.
Thank you.
Thank you, Jessica.
Thanks, everyone.
Over to you, Margaret.
Thank you, everyone. So I guess this is the end of our session. Thank you for joining us today, and have a lovely evening. We still have one more session starting from 7:30 to 9:30, the Entrepreneur to Investor Slumber Party. So if you're free, kindly join.
Thank you all so much.
Bye, everyone.
Bye.
Bye.
Thank you.